Good morning, everybody, to the latest Hiremii company update and presentation. My name is Andrew Hornby, MD, and I'm joined by my colleague Brad Kobus, CFO. This morning we wanted to take an opportunity to run through the most recent company update following our Q3 results and just a general update for the market as well. So, firstly, thanks very much to the team, the board, and the investors for the support that we've had just recently. We'll jump into give the update now, and hopefully everyone can hear on this end. We'll be taking some questions. If you guys like to ask myself or Brad anything specific, just jump into the chat, and we can cover those off towards the end, and hopefully we'll take an opportunity to answer any questions that you might have. I'd encourage you to just have a quick read through and a flick through of the disclaimer, and just to get an idea. It's also on our website as well to review. So look, just jumping in to slide number 1 in our history. Most of the guys have probably seen this now, but we wanted to just add a couple of things into the history, just for context for investors. Sometimes these things can get forgotten, but there's a few key things that we wanted to mention. So most people know that Hiremii was founded as on contractor back in 2017, but around that same time we were actually accepted into the PwC Align and Connect program. And look, that program was really started around that time as well. It's quite a prestigious program. It actually costs a fair bit to join these days. There's about 250 million of sales opportunities in that ecosystem. So it's something that's there for Hiremii to leverage and to partner with if we're looking at expansion both nationally and internationally. Most people are aware of PwC, so there's some interesting things that we can do with those guys potentially into the future. So in 2020 to now, we obviously rebranded to Hiremii, and that was to better represent the platform that we were building and tapping into the AI. We successfully raised funds in 2020 and then listed on the ASX in May of last year, raising 6 million. Later that year, it was a busy start. The acquisition completed of Inverse Group, and that included myself and Chris, who had founded the business, but also invested in Hiremii back in 2018 as well. So we are quite familiar with the business. Obviously, myself and colleague Brad joined the company officially in our roles in January, and we recently completed a capital raise, which means that we are well funded to take things forward. So the last part of the history there, so we engaged a development consultancy, Horizon Digital, recently. They are a small, nimble, but high quality dev partner for us. So they're assisting with AI integration into the platform at the moment, and we're quite excited and pleased to be working with the team there. Moving on just to our leadership team. So you can see a few smiley faces on the screen in front of you now. Just a couple of people to note on here as well. So Maria, who's quality and compliance manager, she's absolutely fantastic, building out our systems and processes that will enable us to continue our growth into a hopefully much larger business. We've got Bronson, who's our IT and product manager, and Bronson is working tirelessly to help the AI and dev partners to get our quality stuff integrated together. So it's good to share some of the people who are working very, very hard behind the scenes, and we look forward to continuing to work with the guys and building a great business. So we'll start with providing some of the highlights from Q3. Obviously, we had the benefit of the Inverse acquisition, which meant we were able to increase the top line by 93% on quarter on quarter. So we achieved 3.3, just over 3.3 in the quarter, and which was a fairly solid performance. We're hoping to be able to build upon that as we go in the future. The leadership team are now in place, and we are looking to drive growth as well. So look, it's an experienced recruitment team. We have relatively stable margins, and with that, I think we can build a good sustainable base. The idea is to leverage off the existing clients that we have and continue to build from there. Tech team, as we just touched on, are developing a platform to deliver the AI investment. So I guess that's why we're all here. We're looking to push the technology as much as we can, and hoping to get get to a time in the relatively near future where we can start to really test and validate that and start getting excited about it and take it forward. So look, in the period, we obviously integrated the Inverse Group. This was the first full quarter that myself and Brad were in the business. We're able to reduce our cash costs by about 114 per month post the integration. And look, I think where the business is at the moment is we're on a relatively solid foundation. There's still work that we need to deliver upon when it comes to hopefully keeping those costs stable, and yeah, obviously working pretty hard behind the scenes to deliver margins and grow the top line, and keep that cash cost base as low as possible. So we're running a very prudent ship here at the moment, and hopefully that gives investors confidence that we're looking after your funds pretty well. So recruitment cost, recruitment sort of client base at the moment, sorry, is steady at about 100 clients. As COVID restrictions lift, we do see opportunities. Have probably been felt more so in the past month or two, just simply because we're still in a sort of relatively talent short market, but WA in particular, which is predominantly our focus at the moment, there has been a ramp up. So we've seen both internally and externally in our clients that we've had some COVID impacts. Touch wood, and thankfully not too major, but it's something that we are keeping a close eye on and doing our best to mitigate those challenges as they come up. So that's a couple of highlights from the Q3 specifically. We'll sort of jump into our near-term focus for the remainder of 2022. We have just hired a marketing and communications lead, and we are looking to start talking about some of the exciting things that we're doing in the business. It's been a, I should say, probably a quiet few months on the communications front from us, and I think that's as the business sort of focused inwards in trying to put the business onto a sort of firmer financial footing, and make sure that we have a solid foundation going forward and focused inwards. So we're looking to certainly use the marketing and comms strategy now to help channel opportunities through for both the technology and the traditional recruitment side of things. So keep an eye on some of the changes that you might see coming up, and some of hopefully the improvements that we will see there as well. So we are expanding the traditional recruitment part of the business. So the strategy for us as we've come into this role now is we have obviously a dual part of the business, which is the Inverse Group, which is a traditional recruitment business focused on energy, resources and digital. We would like to see continued growth in the Inverse part of the business. It will help us to leverage off the strong relationships that we have there as we start to take the technology into our clients. And with that, we would like to continue the growth that you guys have will see in a couple of slides ahead. And with that, it's important that we continue to invest in good people. So we will be adding to the team in the next couple of months, and those people will be people that I think will help us to meet our goals for the next year or two before we make that investment again for the next phase of growth. We're looking at high caliber business development at the moment, and that'll be aligned with that growth strategy. So keep an eye on that. We will continue to review global expansion opportunities, leveraging the PwC Align and Connect program. And look, we're not taking our eye off the ball locally here. The PwC Align and Connect program does give us the opportunity to look at a global audience when it comes to our technology. So there's a few hurdles that we need to go through, but certainly that's something that we would like to continue to consider and certainly get a bit closer to that program. So on a cost base, we're continuing to drive cost optimization as much as possible. Myself and Brad, we're leading a sound risk management and careful investment of funds. We think it's important to continue to build that strong foundation and give investors the, I guess, give them the comfort that we're building a strong underlying recruitment business that will hopefully continue, at least in the short term, to underpin some of the spending in technology as we continue to develop that. So it gives investors, I guess, a two-pronged investment approach there. You've got the potential upside in the technology piece, and you've got a relatively strong and stable brand in Inverse in the recruitment side. So, you know, our goal is to continue to manage those monthly costs. We are targeting break even in the underlying recruitment business and looking at group cash flow neutral as soon as we can. Obviously, that's something that we're working towards, and one of our short-term goals to try and achieve by 2023. So, on the technology side of things, we're looking in the near term to roll out the shortlisting modules, and that'll demonstrate to our clients that AI can produce as accurate, effective, but much quicker shortlisting than a human recruiter can. We're quite excited about phase one. In the demo scenario, we were able to show quite effectively how this can work, and also it will provide us with some opportunities to build a bigger picture from there on. But obviously we're taking this, as we said in earlier presentations, in a modular approach. So yeah, hopefully we can continue to build on that, and we'll be looking to deploy that technology as soon as we can. We mentioned in here there's a couple of dates. We're looking at internal deployment and testing within the Inverse business. That gives us an opportunity to sort of reflect a bit of our external clients and look at how we would use that as an internal recruitment team, mirroring how our clients would use that as well. So we think it's an important opportunity for us to test and validate that before we go and start to test it in a client environment. So we're quite excited about that for the near term in 2022. So providing a technology update, I've just touched on that now, and I'll just follow through on this slide to give everyone a bit of a sort of feel of what we're looking to do. So overall, the technology opportunity is looking to disrupt a highly subjective and manual industry. So I'm very familiar with traditional recruitment, and it is a labour-intensive industry. So there are lots of opportunities to disrupt this positively, and not in a sense of taking jobs away from anyone, but certainly giving people the opportunity to leverage technology so that they can complete some of those manual tasks much quicker through a lot of automation. And it will enable us, I guess, as the humans part of the interaction, to focus on that higher quality of contact, relationships, business developing, and ensuring that we're providing a good level of service to our clients. So look, we're really excited about what the potential of AI looks like within the ecosystem. There's really not been a great deal of automation and AI in the recruitment sector, particularly here in Australia. There's been a bit of advancement in the US, for example, coming out of Silicon Valley, but we're a little bit behind here, so there is an opportunity for us to continue. So we've obviously made a significant amount of investment previously into the AI component. That investment will slow down as the knowledge graph and AI investment sort of matures. Our goal now, and we touched on working with Horizon Digital, is to enable that AI that we've developed to sit within a usable platform that we can take into our both internal and clients' sort of user interface. So the knowledge graph to date has been implemented. It is an industry-leading, I guess, context mechanism that's, as we've said here, delivering high-quality matching results. And the idea behind that is that we sort of take the natural human bias out of any sort of shortlisting criteria, and we can be completely neutral in looking at skills first type approach to hopefully finding great people for our clients. So the opportunity here, we've sort of kept it a bit general at the moment. We're working through that strategy of how we will approach the market. We obviously have a suite of consistent clients in the multinational, national and local sort of areas, and that's within the energy sector, the resources and technology. This may have an ability for other recruitment firms to use and leverage as well, particularly on the SME side. And we've said here SME hiring managers. So there's a lot of organizations that don't invest in recruitment teams, that don't invest in HR. And some of those SME hiring managers are looking for the ability to tap into a quick, efficient and lower cost opportunity to hire good people. And they may well present as a strong opportunity for us as we look across the market. So the external customer platform for shortlisting, we're due to launch that in the next 6 months. I mentioned just briefly earlier, before the end of the financial year, we're hoping to be able to deploy and validate and test and use this internally. So between then and the next 6 months, we see an opportunity where we can get this in front of some of our good clients and take it on from there. So, okay, that's a short technology update, recruitment update. So look, we wanted to add in just the ability for our investors to see what the recruitment update might look like in terms of inverse specific, and just give people a sense of confidence that what we have here in the recruitment team, it is a fast growing recruitment business as well. And our approach at the moment is to both invest in the recruitment and invest in the technology at the same time. We understand that's a challenge, but we're very familiar with the recruitment side, and obviously the tech has given us an exciting opportunity to leverage from it. So, as I've said, the energy sector is changing somewhat. We are seeing decarbonisation in some of the major oil and gas companies, and that is opening up a lot of new energy opportunity into the market. We were very early in our support into new energy, so we're very pleased to work with some of our fellow ASX listed companies, such as Hazer Group, for example. We've been supporting Hazer for some time. They have a novel approach to hydrogen through their proprietary technology. We're working with a number of other ASX listed companies, both large and small, who are looking to displace traditional fossil fuels. The resource sector that we're supporting at the moment, so we are very much aligning ourselves to the future of mining as well, particularly in the landscape of electric vehicle and battery technology. We're very pleased to be supporting one of the largest rare earths projects here at the moment as they ramp up their engineering and design phase. So we're looking at the future of industry as a business, and making sure that we're both from a risk perspective, we're well diversified, but also as an opportunity, we're focused and front and center when it comes to companies looking to leverage sort of our expertise in building their new energy teams. We see a lot of synergy across the group. So as the inverse traditional recruitment side of the business continues, we do see a greater opportunity to leverage technology, particularly in some of our multinationals who have, very large and diverse teams. Typically one of our multinationals has 55,000 people globally, 3,000 people in Australia and 300 people in Perth. So there very much is a pathway for us to engage locally, build nationally, and then look at global opportunity as well. We have integrated the corporate and support teams, and from a compliance perspective, that's led by Maria, who you've seen in the previous slide. We've got Chris Flint and Nicola both leading that recruitment team in the back end as well. So there's a couple of things that we've noted there as we have a strong client base, and we certainly have an opportunity to expand market share, client share growth as well, and a strong operating platform. So we feel like we're well positioned. And look, the chart on the right hand side that you can see here, that's just a picture of the inverse business over the last sort of 5 years. So you can see the growth that we've been able to achieve. Hey, look, I'd like to think we can continue. It's obviously easier to grow from 0 to 1 to 2, but certainly that trend, we would like to see that continue, and hopefully we can finish the year well. So look, in summary, we've got a strong recruitment team, and we've delivered consistent growth in the past. We do expect that long-term trend to continue post-integration. So it's a recruitment update for you. Just the general sort of long-term opportunities that we see here. So general in nature, but we've obviously got an increasing existing client depth. So we touched on one of the previous slides. We've got about 100 active clients. We are limited at the moment with just how quick we can support those clients. We certainly, as a traditional recruitment part of the business, have more opportunities, or you could say we're at capacity in terms of what we're able to deliver at the moment, and hence why we are looking at continuing to invest in delivery. Not necessarily to look external at the moment, but there's more that we can do with our existing clients. And as we grow that business development and look for new markets and new clients, we'll hopefully be able to provide an even better service as we go. So we've touched on the PwC Align and Connect. We would like to consider expansion there. That will be in line with the technology part of the business that we have. So we see that as being the big opportunity for us, both on a national and international basis. And we're working closely with PwC to investigate how we can do that as soon as the technology comes online. Energy transition focus, as we touched on in the previous slide, the world is starting to move away from fossil fuel. We have a massive opportunity on Australia to help the industry through that support, particularly in the export side of things, displacing coal, gas, oil, etc., into the new hydrogen, ammonia, electrification. And we're front and center there, so we're quite excited about that space, and we'll be certainly investing more as we go. On the technology side, we'll be obviously looking to leverage the tech to deliver that high volume solution. So what you might see with the business as we go forward is the inverse recruitment part of the business will be focusing very much on sort of high quality consulting recruitment, and the opportunity within the tech will be a volume based, particularly white collar at this stage, but it'll be a volume based white collar solution. Obviously, first and foremost, we'll be leveraging the markets that we're comfortable with, but the idea is that we will look at new markets as well, where we see a complementary opportunity, particularly something like healthcare. We've obviously got shortages of healthcare providers. I think that the market would be a great one to invest in technology, particularly something like what we're building. So we're going to keep very open-minded with that. Obviously, disruptive growth through online hiring managers and users. So the idea is that we will approach this as a sort of B2C fashion. So we're looking to engage both contracting workforces, full-time people, and utilising obviously our current relationships to build those hiring manager and user interfaces. We'll be expanding our in-house development capability. So that's where we will be able to make that, I guess, exponential shift in our capability. At the moment, we have a small, nimble team internally, and we would like to ensure that we can grow in the right areas, both utilising external high caliber consultancy type businesses like Horizon, but also to focus on our own teams as well. The investment in customer success for the technology platform, once we get that out to market, which, as we've touched on with the timescales, we will be looking at how do we ensure that the customers are getting best use of the platform as we go. The integrated marketing and sales, so we are looking at how we can market the business better locally and nationally at this stage, and help to funnel those opportunities to the enlarged group. So how do we leverage traditional recruitment? How do we leverage technology? We would like to look at and investigate strategic partnerships to help us accelerate that expansion. As I said, in exciting and high growth sectors. So healthcare may be one of those sectors, but certainly within our portfolio we're comfortable with. We see energy transition as a particularly high growth sector at the moment. If you look at some of the LinkedIn information that is available in the market at the moment around in demand, and both from a company perspective, but also in demand from a candidate perspective, you know, we do see a lot of the areas that we are focused on, particularly new energy, technology, software development, they're all in there. So we are certainly in the right place, and we're looking to obviously invest to continue that. So look, just summarising in terms of what we've discussed today. So look, we've got, and what I've said here, an experienced and shareholder aligned executive team in place with significant operational knowledge of the recruitment industry. We do feel that having that solid understanding of the recruitment sector within the team enables us to position and be efficient with how we invest in the technology. So we're looking to displace some of the things that we found over the many years that we've been in the recruitment sector, that can be frustrating, time consuming. So we're looking at those as good opportunities to focus on our initial technology disruption. The combined entity is now operating smoothly. We have still a small but high functioning team. So we're currently looking at how do we build off that foundation of a small team. We have reduced our cash burn, which I think was a very important thing for us to achieve early on. Myself and Brad very much had and have a focus on managing our costs effectively. We've got a focused technology set that we are looking to test and deploy internally in the Inverse group in this current quarter. And that will enable us to quickly test, use, validate, and hopefully be able to quickly move that forward to an external usage. But that certainly is a key driver, and we'll update the market, I suspect, with a specific technology update as we've done that. And but it would probably be good to be able to present how that looks and how we're using it at some point in the future as well. That's something we'll look at. So our strategy to move from blue collar to, I said here, high quality white collar, it gives the investor profile, it gives us as a business a lower risk, so we're not exposed to some of the dangers and risks of blue collar workforces, particularly on mine sites. At the moment with skill shortages, I do see that companies in the mining sector in particular are having to look at maybe lower skilled people to carry out some of those roles. So we have a nicely positioned high quality white collar offering now. That has, as we've closed down the blue collar, obviously the goal for us is to replace those quickly with those white collar consultants and contractors. So that'll be sustainable long-term contracts that enables us to provide stronger forecasts going forward. Recently completed a funding round. So with lower cash burn, it's improved our sustainability. We're fully funded to deliver on current plans for the remainder of the year and very much focused on achieving cash break even. So, you know, we do feel, particularly when you look at the markets at the moment in the technology space, it has been a relatively risk-off market recently. We do want to be showing the market we are sustainable. We are focused on reducing our costs as well as increasing our overheads and increasing our overall margins to create that sustainability with our business. So we've recorded a record Q3 that was achieved in challenging conditions. I think at the moment, people look at the market as providing lots of opportunity, which it is. The challenging conditions that we have at the moment are still COVID impacts, but also a reduced supply of highly skilled people does make every placement more challenging than what it used to be. Everyone has multiple opportunities. Companies are starting to break the bank, so to speak, with counter offering and things like that. So we are having to work a lot smarter and harder as a business to convert those recruitment sales. I'm pleased to say that the team are very much focused on that, and we, as a high caliber and experienced team, we are well positioned to accelerate growth through 2023 and hopefully deliver a good solid Q4 for investors as well. Our new investment in marketing and communications, we think that will start to drive a pipeline of opportunity in both the technology and the recruitment channels. We're really excited to have a dedicated marketing and communications person, and we do acknowledge that both in the inverse traditional recruitment and the technology, we haven't been fantastic to date in terms of telling everyone about some of the fun things and some of the advanced positive things that we're doing in the marketplace at the moment. And so look, we have an established at-scale recruitment business. The tech is positioned to launch with a reduced investment. So, our costs on the investment side will come down, and hopefully that leads to a launch of our tech fairly soon. We have a complementary business model that we think will help enable the tech to be taken to market quicker, and hopefully we can get that feedback quickly and start to convert that technology as we're hoping. So as we go forward, that's certainly a primary goal for us as a business. So yeah, look, thanks to everyone for taking the time to listen to the presentation. I hope you've found it interesting, and look, I'll jump into some of the questions and just start to run through some of those as we go, and hopefully be able to answer those as honestly and as effectively as we can. If anyone does have any further questions, feel free to chuck them into the chat room. So look, number one, I think here, top line trend looks good. Yeah, what about bottom line expectations when cash flow positive? Look, obviously we have two facets to our business. I expect that we will continue to build on the margins. It's important that we grow our business. And look, there's two elements to the traditional recruitment part of the business. So you have a contracting workforce in which we're working with some quite a number of sort of tier one clients. And when you're working with the tier one clients, it's really about getting the volume of opportunity right. We have a whole number of tier one clients, and as a young business, we are looking to do, I guess, leverage those relationships to do more. They're generally fixed margins, let's say 10%, but they're generally 10% of what would be described as a well-paid daily rate, anywhere between, say, $600-700 a day to $1,500 to $2,000 a day. So even when you're taking 10%, you're actually earning some reasonable cash from each one of those contractors. Where we can increase our margins and where we are focused on as well is when we deliver permanent recruitment solutions, it's straight 100% sort of GM. And that's where we have the ability to really increase our overall gross margins. We have a forecast in there at the moment to try and achieve around 100K per month of perm recruitment, which will hopefully underpin a lot of the costs that we have on a monthly basis. Cash flow positive. Look, the underlying recruitment business, we're pleased to say at the moment is cash flow positive. The goal for us is to increase that recruitment, both top line and our margins, to help ensure that we can gain a group cash flow neutral to positive position. We are working hard to achieve that. I can't really give a prediction on when that will happen, but certainly we'll be looking to achieve that as soon as we can for shareholders. As I said, we're fully funded for the rest of the year, certainly to achieve what we've set out to achieve. So hopefully we can take that through into 2023 as well. Jason, thanks very much and welcome. I think we can take you off mute, and I'm happy to do that if someone would like to jump in and unmute Jason.
Okay, that's great.
Hello, Jason.
Hey, Andy, how are you?
I'm very well, thank you. How are you?
Yeah, I'm great, thanks. Appreciate, first of all, the openness in the presentation. It's great to see companies communicate with their shareholders. I think that's one of the most critical things one can do, especially if you're in recruitment. I mean, communication is very, very critical. A couple of questions for you. The growth in Inverse is magnificent, by the way. I mean, that's a testament to you guys there in growing that business. Assuming you're continuing your growth, I mean, from June to March 22, you're looking to probably grow about 180% over last year in terms of that Inverse business. It's really strong. I wonder, how's the Hiremii business part doing? Because that was the one slide you didn't put in, and I think that the loss of UGL was expected to drop about 1.3 million in revenue, which would have taken 6.9 down to 5.6. But my guess is they probably did less than 1 million in the last quarter. Would that be correct?
Yeah, look, the UGL contract came off in I think it was sort of towards the end of November, early December. There was some payments that were due from UGL that may have slipped into December, maybe even January as well. The Hiremii recruitment part of the business, which was trading under on contractor. So just for some sort of transparency around that. So when I came on board, exclusive of the UGL contract, the on contract had about 10 contractors at the time, and a couple of those were with PwC, a couple additional ones with UGL, and there was a couple of sort of sporadic ones there with different sort of tier 3 contractor type businesses. So with the strategy of running down blue collar and focused on white collar, the blue collar that was left in the on contractor business really sort of ended up petering out to really low numbers. And obviously with the UGL contract coming off, that really meant that there wasn't a great deal of contribution from the on contractor Hiremii recruitment business. So yeah, we decided at that point that both from a brand perspective, from a back office perspective, that we'd amalgamate the Inverse recruitment business with the Hiremii on contractor legacy recruitment, and we'd focus on the technology side in the Hiremii business. What you see there is pretty much the Inverse growth today. Before I sort of say that there isn't a contribution from the on contract, I'll just ask Brad, the CFO, to just clarify that. Is there a contribution in the last bar of the slide from Hiremii?
Not in that particular chart. There isn't any on contractor.
Yep. Okay.
But as you said, there is a small contribution from on contractor outside of that.
Yeah.
And then I guess the other side of Hiremii really is a function of when the technology starts to earn, and that currently is not where we're at, but we're expecting that to start kicking off.
Okay. So when you say it's there, it's obviously fairly low then. So essentially, this has become, I guess, an inverse business that has now taken the technology of Hiremii. That will be the part that will grow, essentially, because the some of the business wasn't exactly as it should have been, perhaps.
Yeah. So what we'll be doing going forward, Jason, is obviously Hiremii as the parent company, two operating subsidiaries. I guess one is Inverse as Inverse Group as the traditional recruitment side, and yes, we will be testing and validating, and look, hopefully we'll be also using the Hiremii technology in the business to do it even better.
Yeah.
On the other side is the Hiremii technology, and that's where we will focus on pure tech development. And look, if I could say to yourself and investors, like, you know, what would be an absolute win for us in this business? You know, in 5 years' time, if we were operating just the Hiremii technology and the platform was that successful that we no longer needed a traditional recruitment company, and we could, you know, carve that out and sell it onto the market and focus on technology, that would probably be, you know, I'd probably look back and think we've succeeded.
For sure.
You know, we do have the benefit of a good quality recruitment company, but we also we want to make sure that we're focusing on the tech development, because that ultimately gives us that ability and differentiator versus other companies where we really have an option of taking two high growth companies, you know, to the next level, using each other to get there. So
yeah, gives you that the edge you're looking for, and I think it's just so it's outstanding to see the growth that Inverse has continued to have, which really has enabled the point that you made, that you're aiming for, you know, a cash flow positive as soon as possible. And I think that you know, you may get it in fact before 2023, but I wouldn't preempt that. But I'm hoping that you'll keep growing at that sort of speed. You mentioned the slowdown in IT, which is so you can essentially beta test and make sure everything is going to be right with the IT. I assume you're using some Inverse customers to do that. People that you've trusted or used in the past, so they can test this thing out and make sure it's working beautifully. Is that the idea?
Yes, that is the idea, Jason. We've obviously built a good trusting network on the traditional recruitment side, and we can leverage that to for those teams and those companies to, you know, look and use at what we're building. That's certainly our goal, to go there first. You know, the way that recruitment teams generally operate within sort of any sector is very similar to each other. There's you know, there's an attraction part of the recruitment, which is either a direct approach or it's going through advertising and things like that. You know, you coming in, working the process through an applicant tracking type system, and getting to the onboarding side. And, you know, whether it's the IT industry, the government sector, the mining sector, they're very, very similar. So you know, this is a product that we see as being agnostic to industry sectors. We would like to, from a lower cost opportunity perspective, take it initially into our clients to test and use it, you know, while we're building out you know, what is the right approach to us to take this to a larger audience and a larger sector, and, you know, who is going to want to use it. Maybe, you know, we're not discounting any sector. You look at the banking sector, the finance sector, for example, they've been going through a lot of changes themselves, a lot of technology adoption. That could be a good opportunity to collaborate and work with some of those banking sector professional service type clients, where they're looking for an option like this as well, rather than still using a traditional recruitment sector type approach. So whilst it is agnostic, we do see that opportunity in the first instance to build it using the inverse clients.
No, it sounds great. I mean, the potential of this product, if it does have significant advantages, I mean, not just within the local or the Australian recruitment market, but it's a global platform essentially that could be licensed or sold in other countries, or used in other countries around the world. So, I mean, that's certainly very exciting. That's the value of the Hiremii business, to purchase or to do that. Then that's great. I think that's perfect. Just one other question for you. Can you let me know the difference between what you would call employee benefits recruitment versus employee expenses? Because the end of year last year, the employee recruitment and the employee other expenses were pretty much the same amount, $450,000 and $459,000 each, but including a very small portion even of inverse, that percentage of expenses other came down significantly. Can you just let me know what the difference, what the other is included in terms of employee benefit?
Yeah, I'll pick that one up, Jason. Really, I've been trying to move the reporting to a place where you can clearly see the difference between the recruiting business and the sort of corp and tech as the other side of it. So the short answer to that is that the other is really related to the corporate and sort of technology-focused resources in the business. And that way, hopefully, you can get a bit of visibility around the overall net margin on the recruiting business historically, but then as the tech builds out and covers its costs, we'll see that as well.
Okay. No, that sounds great. Anyway, that's all I have really. Great job, both of you. I think that there's just definitely been a significant wind of change that's occurred in this business over the past 4 or 5 months, and I really do. I'm sure all shareholders appreciate it, but I'm sure there'll be many that will appreciate it even more in the months and the years ahead. So, thank you for the discussion.
Yeah, no, thanks, Jason. And look, we do really appreciate your current support as well in the markets. We are pleased to see you leading the top 10 there. So we do appreciate the investment from yourself and the encouragement, and yeah, we hope that we can continue to repay that loyalty and support from yourself and our other shareholders. Look, I think in terms of just touching on one last point here as well, is that I think, Jason, you did mention that you like the growth, the year-on-year growth that we've had in the inverse business. You know, if you break that down further and you look to the quarter by quarter or month by month, you do see an ebb and flow of growth, steadying and growth and steadying. And what you'd see there is that you grow in the recruitment side, and then you invest, and then you grow, and you invest and you grow. And we're just at that phase at the moment where Brad and I were focused on cost reductions. The team have been phenomenal here because there's been a lot of change, as you touched on, and you know, we're looking to deliver another strong Q4, but we are really investing for the, as I said, accelerated 223. We've got a couple of new people that's going to be joining us over the next sort of 6 weeks. They're key industry, high caliber people that can assist on both sides. In fact, someone who's joining us in the next 4 to 6 weeks, she led a very similar internal technology development in a large scale national Australian business. So we can leverage off that experience of how she's operated with something similar to this, not as high complex, but it was an internal similar demonstration, but also a high quality recruiter. So that we're making the investment now, and we're refocusing on, how do we grow this business again? I know that it looks like it's been high growth, and it has, but there's also been a leveling, I'd say, over the last couple of quarters as we've come into the Hiremii fold, and we're positioning ourselves for that accelerated growth in 2023. So yeah, there's no guarantees of anything in life, but certainly we have a very strong team here. They're working extremely hard, and we're hoping we can keep them together. And like any good team, I'm a Manchester United fan, so many years ago, they bought a great team, and it delivered lots of success over a number of years. And we'd like to think that we'll keep this team here, and we'll be nicely exposed to some of those growing markets that we operate in over the next couple of years. So, right, well, thank you very much to everyone. I really appreciate you taking the time to listen to us this morning. We'll continue to provide updates, and as I said, we'll probably look at doing a technology update at some point in the future. But if anyone would like to contact us, feel free. I'm always open to calls, texts, emails. Give me a shout if you'd like to ask any questions, and we'll hopefully be engaging with you guys again in the near future. Thanks so much, everyone, and have a great week.